A cash flow statement. The cash flow statement gives us an idea of what the company is spending money on and how much it's increasing or decreasing its total cash. It also helps us to get an idea if the company is financially healthy. Now, there are three components to the cash flow statement. Number one, we have the operating activities. That's the cash the company makes or spends in its day-to-day operations. Number two, we have investing activities. That's basically any sort of money the company receives or pays for by selling or buying a long-term asset. Thirdly, we have the financing activities. That's the cash flow related to the financing side of the business, such as paying dividends, receiving cash for issuing stock, or cash paid to pay off debt. Cash is king. It's very important that a company always has enough cash to pay off its short-term debts and obligations. If the company is showing problems of liquidity, then it might not be such a good idea to invest your hard-earned money into this type of institution. Let's look at Cava's cash flow statement that was released in November of 2024. As we can see, there are three main parts to the cash flow statement. We have the operating activities, the investing activities, and the financing activities. Under operating activities, we usually start with net income. This is the number that is taken from the company's income statement. I explained the income statement in another video. After the net income, we have the depreciation, the equity-based compensation, and impairment and asset disposal costs. These numbers, as you can see, are all positive. When we can see the number beside the trade accounts receivable is actually in parentheses, that means that this number is negative. After that, we have a bunch of other operating activities, and at the end, we get the total from the net cash provided by the operating activities, which is $131,174. This number is actually 131 million because all the numbers in the statements are per thousand. When we compare this number with prior year's number, we can see that there was a big improvement, almost double, in the net cash provided by operating activities, which is a really good thing. After that, we have the numbers spent on property and equipment. This is usually probably because Cava is a restaurant company. This is probably they spent this on on acquiring more and more restaurants because it is a growing company and they're building their more and more restaurants every year. The last one is the financing activities. As we can see here, Cava doesn't have that many financing activities, maybe just this $17 million approximately spent on tax withholding on equity-based compensation. So that's not a big deal. And at the end of it, this is the important number that we should look at, is the net change in cash and cash equivalents, which is approximately $34 million or $35 million. What we can do here is actually compare this with this number here. It might be shocking that the number is much lower than the prior years, but the reason the prior year's number was so high was because it's very close. This year was very close to their IPO, and that's where they basically raised all this money here. This is the proceeds from the initial public offering. So they got about $342 million in cash for their IPO, which is an incredible amount. And at the bottom of the cash flow statement, we can see the changes. This is the cash flow at the beginning of the year, and this is the cash flow at the end of the year. I hope this helped you get a basic understanding of the cash flow statement, and good luck on your analysis.